Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Tariff countdown. President Trump's so-called reciprocal tariff plan comes down to the wire, with the details still said to be under discussion. The White House says they will come into effect immediately after the announcement. Asian stocks and futures edge lower as traders struggle to position ahead of the statement due at 4 p.m. New York time on those levies. Plus, in France, Marine Le Pen's election hopes are given a lifeline after the Paris Appeals Court says it should be able to rule on the far-right leader's legal challenge much sooner than expected. Let's get to the market positioning then, with, of course, uncertainty being the dominating factor today as we lead up to that crucial announcement and the details of the tariff plans that, according to the team at Bloomberg Economics, could hit $33 trillion worth of global trade. Some countries could see 90% of their sales into the US market essentially closed off, depending, of course, on the type of tariff that President Trump ultimately goes for, as the team continues to wrestle with the details. European futures pointing lower by 0.2% after actually a strong day for European stocks yesterday, with gains of more than 1%. Here in the UK, FTSE 100 futures pointing to losses of 0.3%. It seems the UK has not managed to get a carve out on and around the tariffs, at least for now. S&P futures stateside pointing to losses of 0.1%. Nasdaq 100 futures pointing lower by 13 points. Let's flip the board and have a look cross asset then, with the 10-year continuing to be in focus, still below the 420 level, but yields are up in the session today after, of course, a run in terms of the bond bull market. PIMCO saying that this is still one of the best bets, given the 3% gains that you've seen for Treasuries versus losses of almost 5% for, of course, equities in the first quarter. 419 right now on the benchmark 10-year, with yields up 2 basis points. The Japanese yen, 149, with Goldman Sachs saying this is the best trade given the risks around recession and tariffs coming through with the US, with 140 the call from Goldman Sachs, potentially if those recession risks rise. The Japanese yen for Goldman Sachs is a place to hide. Brent trading at 74.50, largely unchanged on oil, and gold still around those record levels at 3,117 per troy ounce, up 0.1% in the session today. Let's cross over to Asia right now, where Avril Hong is standing by in Singapore. Avril, how are investors in Asia gearing up for Trump Tariff Day?
I think for the most part, they've been scaling back risks ahead of the tariff announcement. So even though you're seeing these gains in Japan, they look pretty unconvincing across the board. We have seen how Chinese stocks earlier, where the Hang Seng managed gains of about 0.8%, much of that being erased, and Japanese South Korean gauges have been underperforming for the most part. You flip the board just to give you a further sense of how fragile things look. Xiaomi, Alibaba, these were the two stocks which were the biggest boost for the Hang Seng earlier. Most of those gains evaporating. For Xiaomi, of course, this is partially related to these investigations underway amid a crash which involved its EV vehicle. But of course, taking a look back as well to the larger EV ecosystem, among some of these Chinese EV makers, their sales for the month of March did look quite solid. So among the stocks that are doing well today, for the board, just raking through as well what we're seeing on the currency, because the renminbi has been holding fairly steady today. The PBOC kept the yuan fix at the weakest level in about 2 months against the greenback. But if you look at what implied vol is telling us all the way into the 1 month, the expected volatility is really for the next day, which is, of course, a period that encompasses the tariff announcement. That's where we're seeing the surge. For the board again, because as you saw there, the Japanese stocks look to be picking up some pace now, and some have actually highlighted that after the tariff announcement, we could see an initial decline, but then did buyers drawn back in as, you know, there's been potentially that idea of a turnaround. If you look back to the 2018 playbook, for example, where the topics before the imposition of tariffs on China were at the 6 months low and then subsequently rebounding, I think that's what's feeding feeding into the optimism that after the tariff announcement, we see a bit of a pickup. But the case this time around, note here, is quite different. Firstly, the tariff announcement is going to squarely hit Japan if things come to pass as expected. And keep in mind as well that the monetary drag, potentially another headwind for Japanese stocks, where the yen in circulation in the country overall has been shrinking as the BOJ has moved away from its unconventional monetary policy. So all in, adding to potential headwinds, maybe we need to see more for Japanese stocks to see a bounce after the tariff announcement. Tom.
OK, Avery Hong in Singapore. Thank you very much indeed on the adjustments in the Asian markets to the tariff threat, with President Donald Trump, of course, gearing up for sweeping tariffs set to take effect immediately after they are announced today. That's what we've been hearing from the White House. The plan is, though, down to the wire, with sources saying his team is still finalising the fine print just hours from a planned event in the White House Rose Garden. Let's bring in Bloomberg's Oliver Crook for the details. Ollie, the day then has finally arrived, and yet the Trump administration has still not landed exactly on their plan as the clock ticks down.
Tom, we all know what it's called. We just don't know what's in it, right? Liberation Day has been something that's been sort of looming on the surface. It's been looming there on the horizon for a great many sort of weeks and months. And for sort of business, for, policymakers here in Europe, for the markets, it's all, extremely ominous because it will contain something big. They just don't know what it is. And it seems that the Trump administration itself, at least as of a couple hours ago, is still deliberating about what these reciprocal tariffs actually look like. Is this just a sort of universal tariff, one block tariff that goes across sort of all the regions across the world? Is this a two-tiered system? Is this a country-by-country sort of deliberation about individual tariffs based on the trading relationship with the individual country, but also other sort of goals, economic goals that the United States might want to impose upon them? These are still sort of up in the air, and this is something that obviously is incredibly critical for all of the CEOs that I've spoken to over the last couple of months and weeks in order to try to determine what to do. But the only thing that is really quite certain, Tom, there's two things. One is that basically tomorrow, as of tomorrow morning, basically you will have the highest trade barriers between the United States and the rest of its trading partners, in probably over a century. And the only other thing, and this is potentially the silver lining here, Tom, is you will have at least clarity for the rest of the world in terms of what this will actually look like. And that will mean that policymakers, for anyone from here in the EU, for these businesses that have huge businesses operations in the United States, whether it's the automakers or others, they will start to be able to plan and they start to be able to respond to what the Trump administration is sort of packing in the pipeline. All I can say, Tom, is I would not want to be, the CEO or the CFO of a company right now preparing earnings season for the next quarter, because this is going to be something very, very interesting to talk to the executives about how they anticipate this is going to affect not only their own sales, but the macroeconomic environment. All of these inputs still to play for, and that sort of calculation will begin tomorrow morning.
Yeah, I mean, to your point, is the uncertainty itself more damaging than the actual tariffs themselves? What could it mean then, Ollie? Chart for us what the impact could be on Europe and the potential retaliatory response.
Yeah, so Tom, let's look at this in sort of two different categories. There's obviously the policy response, and then there's a sort of impact on the actual companies themselves. I mean, we heard from Ursula von der Leyen. We've heard the sort of same line reiterated from the very beginning from policymakers here in Europe, saying that basically this is not the fight that we started. We would like a negotiated arrangement with the United States over the next couple of weeks. We really didn't even want to go into these tariffs, and that basically we'd like to resolve this very amicably. But if we cannot, we will retaliate. And the EU is really of all the sort of trading partners, kind of a position to do so, despite the fact that they still have a surplus with the United States. This is a $1 trillion trading relationship between Europe and the U.S. When you think about the companies, I mean, I spoke to this BMW CEO a couple of weeks ago. We were talking about just the tariffs between Canada and Mexico in the United States, because BMW makes some cars in Mexico. They said that would cost them €1 billion. We now have reporting overnight from Mercedes-Benz that they're looking to basically pull out their entry-level cars from the U.S. market because they are no longer economic potentially with these 25% tariffs. But Tom, the other sort of great overlay here, and I think we should say that the fact that basically tomorrow, when these tariffs come into place in Europe, over Europe, it is the day that Marco Rubio, the Secretary of State of the United States, arrives here for a NATO meeting. And when we think about what the tariffs are, is obviously economic domestic policy for the United States, but it is also foreign policy at a time when Europe needs the United States and Ukraine, needs the United States for defense, and at a point point in which those two sort of propositions are their most precarious ever, and the Trump administration is really betting that they're the only game in town. We'll see to what degree that is the case.
Yeah, and whether or not consumers and voters in the US voted for less choice, ultimately, in terms of their options, whether it's on the forecourt, of course, of auto sales rooms or in the supermarkets of the US. But maybe that means, maybe that is the price worth paying, some will see, in terms of developing the manufacturing base of the US itself. Oliver Crook, thank you very much indeed with the latest as we gear up, of course, ultimately to the key event of the day, of the week, possibly the year as well, with those Trump tariffs. Let's think about how the markets are positioning around this then. Traders tussling, of course, with how the Fed is likely to respond to tariffs set to be announced later today. Former Fed Vice Chair Richard Clarida told us he sees the central bank on the sidelines.
I think Jay Powell at the March meeting, at least to me, signaled they're happy to basically sit on the sidelines. I don't see them acting preemptively to cut rates because they may be worried about a downturn. And so what that means is that it will take tangible data of a slowdown in payrolls, maybe a big pop in unemployment. So I see the Fed on the sidelines until the macro data really turns.
OK, so the Fed on the sidelines is that view. Bloomberg's Valerie Teitel joins me now. Val, are the markets also on the sidelines?
Tom, one thing that I found really interesting is that, yes, the consensus positioning, what even is the consensus positioning for today is very confusing. But one thing that stood out to me as very clear is the market is hedging against a rally in the Treasury market. If we look at the put call skew in the Treasury market, it is clearly showing that traders are buying these call options in the Treasury market, basically protecting against yields moving lower, which to me, Tom, is showing that the market is more concerned about a slowdown in growth in the U.S. economy than they are about the inflation impulse from these tariffs due to be announced later today. That is the key takeaway for me when it comes to the Treasury market. We also had an interesting call out from Goldman. Their favorite hedge today is to be long the yen. They see dollar yen, their year-end target being 140. I know this is something you mentioned as well at the top, Tom, but they are saying this is the favorite hedge when you have an environment with real yields lower and the equity market lower. It's the yen where you want to hide out, and they see the dollar yen moving towards a 140 handle before year end. But again, I want to clarify, Tom, yes, we have a big announcement on the tariffs today, but we could also get a massive macro catalyst from the rest of the data coming out of the U.S. this week. The big one being Friday's payrolls. And then we actually get to hear from the Federal Reserve Chair himself what he thinks about these tariffs and what he thought about the payroll print on Friday. I guess the conclusion that Clarida said in that quick video there is the Fed is on the sidelines until they see the hard macro data weakening. It could be that we see a tick up in the unemployment rate, and the Fed tells us later that day that they're there to protect growth with a cut at the May meeting.
Yeah, and the manufacturing data suggests that there is softness already there. We know the labour market is cooling as well. So we'll see, as you say, around the data points on Friday, the non-farm payrolls, and what we hear from Jay Powell, of course, post the tariff event. Bloomberg's Valerie Teitel on the market positioning, thank you, with the evidence suggesting that the focus for now is on growth and recession risks over inflation. At least for now, we'll see how that theme adjusts. We're going to be speaking to the US Commerce Secretary Howard Lutnick on President Trump's tariff announcements. Do not miss that interview, 1:30 p.m. UK time. So tune in for that. Here's what else to be thinking about today then. The EU defence ministers will be meeting later today. We keep across any additional lines in terms of commitments on defence spending and whether or not other nations will be looking to try to at least go some way to matching the defence spend commitments of nations like Germany. At 11:30 a.m. UK time, talking of Germany, Isabel Schnabel will be speaking, of course, typically on the hawkish end of the spectrum when it comes to the ECB, as markets try to frame the next steps for the European Central Bank as it weighs up that additional fiscal spend on infrastructure and defence. And at 3 p.m. UK time, we get factory orders out of the US, again, after some of the manufacturing data yesterday came in weaker than expected. How are US factories holding up amid all of this uncertainty? You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go on the terminal. Coming up, we are going to focus back in on French politics, where the far-right leader Marine Le Pen's hopes for the 2027 presidential election have been kept alive. The latest from the Paris Appeals Court is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday, everyone. Now, Marine Le Pen's hopes of running for the 2027 French presidency have been given a boost after the Paris Court of Appeals said it should be able to rule on a challenge to her conviction and election ban by the summer of next year, much sooner than many had expected. Let's get the details now with opening trade anchor Kriti Gupta, who's been following this for us. Kriti, what do we know at this point in terms of the decision around this appeal?
Well, we know that the 2027 deadline that would have initially escaped her, or stopped her, I should say, from running for president and in those elections is no longer a risk case, because her legal team has gone and appealed this decision and gotten a time frame that will give us them enough cushion, I should say is the right term, to be able to get an answer and still run for president if it were to run in her favor. So now it looks like we're going to get a decision by the summer of 2026, which Tom admittedly still feels very, very far away, because she's not just talking about dealing with an electoral ban, she's also talking about jail time of something like 2 years as well. The start time of that ban is also in consideration. It also jeopardizes her current seat and say in the French parliament as well, which is the other piece to the story, because we know historically, when you look at kind of her role in French politics right now, she was key in terms of really stopping a lot of the legislation and a lot of the moves from Francois Bayrou, as well as his predecessor, Michel Barnier, as well. So that has kind of been the role that she has had, and a key one, by the way, in splitting parliament into 3 different cohorts, basically, to really stop all of that legislation. So this is where things get really tricky. The argument she is making, or her legal team, I should say, is making, is that ultimately, because she's so high profile and because she's a politician at the end of the day, that there is going to be a question of kind of the voters' appeal will take precedence over justice of the law. At least that's one take that her legal team is making.
Because this is still a party, the National Rally, with Marine Le Pen at its head, at least for now, that is polling strongly as we lead up to that 2027 presidential election. It's still a long way off, but the polling has been pretty consistent in terms of the strength coming through for her party. What do we know about the domestic impact then? There's the policy piece, and then there's the standing of the National Rally within that race towards 2027.
So there was an expectation that if the ban did indeed go into effect and just preclude her from running for president in 2027, we would see some sort of widespread unrest. We would see the markets freak out, and we've seen none of that in the bond market or even domestically on the ground as well. And I thought it was interesting. Some of the French newspapers have come out with polls that suggest that a lot of the electorate of the French kind of republic aren't actually seeing this as a violation of justice or any sort of kind of Trump-esque moment in terms of her legal battles. In fact, 54% of the folks polled by Le Figaro have talked about the fact that they actually think this is French democracy at work. Another 63% have said actually they're indifferent to the verdict. They haven't been following this case at all. So this kind of moment that we've seen in terms of Le Pen's impact on domestic French politics isn't there. With that being said, stay tuned, because there is also an element or a question here by geopolitical analysts saying maybe we're just too far away from the actual presidential election and from the idea of the appeal in the summer of 2026 for this to actually create any real reaction for something that's about 2 years out.
Yeah, there's Jordan Bardella within the National Rally. There's Jordan Bardella waiting in the sidelines, still in his kind of late 20s, which is pretty remarkable. But he's a key player within the National Rally who some have speculated could take Marine Le Pen's place. Maybe that has been put on the sidelines, at least for now. When it comes to the political mechanics of France, it was the National Rally who had to be won over to get the budget across the line for the Prime Minister Bayrou, as you say. So I wonder if there's a question around what policy agenda could be affected, if not this year, then next year, as the National Rally looks to maybe leverage some of this discontent that we're seeing, not widespread protests, but at least leverage their polling advantage and the predicament that Marine Le Pen is still in.
Absolutely. Well, I think you hit on 2 key points there, which are the 2 key challenges that the RN was really facing here. The first is kind of the demographic that they're appealing to. They wanted to widen that demographic and appeal to the youth as well. And that's where Jordan Bardella, despite his youth and despite his inexperience, as he's been talked about in terms of his profile in French politics, and by Marine Le Pen himself, calling him green and saying that he may not be the one to step up to the plate, has been her number 2 because of his appeal to a youthful demographic that the RN hasn't really been able to penetrate until his entrance into that kind of profile. The other piece of this, as you mentioned, of course, is the budget. And one of the big pieces of why the markets kind of freaked out in June was because Marine Le Pen's policies were ultimately going to widen the deficit, not close it. And that's another piece of this, because if you look at the last deficit numbers, Francois Bayrou's budgets and policies that he has been able to get through Parliament has pulled a deficit that was expected to be at 6.1% down to 5.8%. And the markets appreciated that. It hasn't closed closed the oat-bund spread completely, but it has narrowed it at a time when the bund kind of yield has also been rising. So there is a double whammy here that some of the deficit concerns that did surround Marine Le Pen, at least for the markets, may not be there to that extent anymore.
And the final number for the deficit of 2024 coming in slightly smaller than the official forecast as well, which was helpful as well around the market expectations. Kriti Gupta, thank you very much indeed for breaking down the story when it comes to French politics and what that means, of course, for the markets and policy domestically, given the challenges of Marine Le Pen and the National Rally, although they have been given something of a reprieve given the appeal court timing of 2026. Opening trade anchor Kriti Gupta. Coming up, President Trump is said to be planning a meeting today on TikTok's future with a deal that may include Oracle and Blackstone. We bring you more on that story later in the show. This is Bloomberg. Welcome back now. Since the last time President Trump was in power, Airbus has diversified its suppliers, including a factory in the US. Boeing, on the other hand, uses parts imported from Mexico and Canada, both countries, of course, which have been targeted by President Trump. Bloomberg's Guy Johnson went to the heart of Airbus in France to find out why the company might be better positioned than Boeing in the upcoming tariff war.
These giant nacelles will soon become the key connection between an Airbus aircraft and its jet engines. Supplier Safran makes about 400 of them every year here in France. But since Donald Trump last imposed tariffs on steel, aluminium and aircraft during his first presidency, the company has significantly broadened its geographical footprint.
Our coding centers are next to the final assembly lines, so in China, Tianjin, in Alabama, USA, in Hamburg, Germany, and in Colomiers, Toulouse, France. This way, the final assembly line doesn't have to suffer any burden.
This is the Airbus A321 XLR, the youngest in its family. It has a nose from France, a body from Germany. The wings come from Wales. The rear stabilizer comes from Spain. Avionics come from America. When it comes to engines, you have a choice. You can either go American or French-American. It's up to you. Airbus relies on as many as 18,000 suppliers worldwide who produce roughly 80% of the aircraft. To manage tariffs, the company has the option of using its US factory in Alabama.
We are procuring from everywhere around the world, assembling there in the US with US jobs, 2 US airlines as well. So I think we are key to the US ecosystem, to the aviation ecosystem, and we think that plays a big role in how tariffs are targeted.
In the end, Faury says that new tariffs may hurt Boeing more than Airbus. The US company uses parts imported from Mexico and Canada and does not manufacture in the EU. It could also lose out in the growing Chinese market. Unintended consequences of the new transatlantic trade war.
Bloomberg's Guy Johnson reporting from the headquarters of Airbus in Toulouse, France. Coming up, we're going to get the perspective of a leading trade economist on President Trump's tariffs as countries and companies brace for the impact. This is Bloomberg. Good Wednesday morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Tariff countdown. President Trump's so-called reciprocal tariff plan comes down to the wire, with the details still said to be under discussion. The White House says they will come into effect immediately after the announcement. Asian stocks and futures edge lower as traders struggle to position ahead of the tariff statement due at 4 p.m. New York time. Plus, in France, Marine Le Pen's election hopes are given a lifeline after the Paris Appeals Court says it should be able to rule on the far-right leader's legal challenge much sooner than expected. To the markets then, and a bit of a holding pattern on the futures story as we brace for the impact of Trump tariffs that could ultimately see $33 trillion in global trade in the crosshairs, with some countries, according to Bloomberg Economics, facing up to a 90% drop in exports to the United States, depending, of course, on the nature of the tariffs that come through. 4 p.m. New York time. European futures then pointing lower by 0.2% after a solid day yesterday with gains of more than 1%. FTSE 100 futures pointing lower by 28 points. S&P futures stateside currently down 0.1%, and a similar picture for Nasdaq 100 futures after another choppy session on Wall Street. Let's flip the board and have a look cross-asset, because arguably this is more interesting. You're seeing yields up 2 basis points on the benchmark 10-year after a number of days, a long stretch of the bond rally that continues, of course. The view from PIMCO and others that Treasuries is the place and are the place to hide, given the recession risks of the US. But today, a bit of selling pressure on the 10-year, still below 420 at 419. The Japanese yen, that is also a place to hide, according to Goldman Sachs, on the recession risks around the US, with a call of potentially 140 in terms of strengthening of the yen. Currently, it is down 0.2% in the session today. Brent trading at $74 a barrel, and gold continuing to remain at these close to record highs, just up 0.1% so far in the session on the yellow metal. Now, the European Union says it will use a broad range of options to retaliate against the US if President Trump imposes these so-called reciprocal tariffs on the bloc. European Commission President Ursula von der Leyen says she would prefer to negotiate a solution, but she has warned the EU will retaliate if necessary.
So many Europeans feel utterly disheartened by the announcement from the United States. Let me be clear. Europe did not start this confrontation. We think it is wrong. But my message to you today is that we have everything we need to protect our people and our prosperity.
OK, let's bring in at this point Rebecca Harding, CEO of the Centre for Economic Security. Rebecca, great to have you on. Tariff day as we count down, of course, to the ultimate decision, as we know that the White House and the team are still wrangling over the details of this. What is more damaging? Is it the uncertainty or is it the tariffs themselves?
Absolutely, without a shadow of a doubt, the uncertainty. The problem that we have at the moment is that the United States have pretty much said they are going to withdraw from what we've called the international rules-based order over the last 80 years. It's the structures, it's the systems around international trade, around international economics, and also around politics as well. So all of those institutions, the World Trade Organization, the IMF, the World Bank, the United States is withdrawing its interest in those. So tariffs are one story, but actually what's really going on is this huge overhaul to the international rules-based order, which is manifesting itself through trade. And nobody really knows what's happening here. Nobody really knows how the United States is going to behave, whether this is a negotiating tactic, whether it's real, and that's what's causing the real damage at the moment.
Do you think investors and companies, Rebecca, are underestimating that fundamental, structural, longer-term change that you were talking about versus the expectation, still in some quarters, that ultimately this is a negotiating ploy?
I think the short answer to that question is yes. I think we're not really understanding the magnitude that this represents. I mean, Marco Rubio said there's no such thing as the international rules-based order almost on day one. President Trump has said the rest of the world has been operating against American interests. And actually, if you look back over history, it's been a US dollar international rules-based order since 1944. So we really should be looking at some of these fundamentals as well, because that's actually what's driving the system. Now, actually, I think that the European Union is doing the right thing. It's saying we're robust, we're resilient, we can actually spend more money on defence, we can spend more money on trading with ourselves. And so that actually means that there is a counterbalance to all of this. But what it means is we're all going to have to think about new institutions, new structures, and new relationships.
Is the EU right to retaliate, though, Rebecca, or at least threaten additional retaliation?
So I think this is where we get into really muddy water, to be honest, because you either appease and you say, well, we're going to try and do a deal and we're going to try and be soft with all of this, or you go, actually, this is not right, we're going to impose tariffs. Now, the European Union is strong enough to be able to do that. It has a trade surplus with the United States, so it's actually got some slack there. And a lot of the industry is actually already shielded because there is production capability and there is manufacturing capability in the United States already. A country like the UK is actually a lot more vulnerable, of course, because it's got less of that, and because it's not in the European Union anymore, it doesn't have that type of flexibility. So perhaps there's slightly less negotiating room and slightly less scope for hardman tactics for the UK.
There's also the threat, of course, of sectoral tariffs, Rebecca, and we've seen the auto tariffs announcement, 25% on that particular sector. To what extent do you think that is a template for other sectors that the Trump administration seem to be targeting, whether it's pharmaceuticals or semiconductors?
So the sectoral approach is actually a preferred tactic at the moment, and the reason why, I think, is because we have a situation where if you impose tariffs, say, on automobiles, it's one of the largest traded sectors in the world. So it affects absolutely everybody. It affects supply chains. There are also proposed tariffs on car parts that might come in during May. So again, it just adds to this general layer of uncertainty. And the reason why that focus is there is because it does affect everybody. So it looks to me like pharmaceuticals, semiconductors, German industry is thinking and has been reporting on the threats to the German semiconductor sector over the last couple of days. So we are seeing real concerns, and this is very simply because it affects the way in which companies operate. So they have to make decisions on where the tariffs are going to be, the extent to which iron and steel is included in their supply chains, or car parts are included in their supply chains. It makes life very, very complicated. Unravelling all of this, back to the beginning again, unravelling all of this is really what's making everyone uncertain.
So the Trump administration would make the case that this is a question of short-term pain for long-term gain, as companies are compelled to invest more in terms of factories and footprint, R&D and building and manufacturing in the US. Is there evidence to support that proposition? Longer term, the US benefits from a build-out of manufacturing and factories in that country.
Well, it's economics 101. I mean, if you impose tariffs on other countries, then what you're doing is you are protecting your industry. It's a perfectly justifiable approach, strategic approach to trade and economic protectionism. And it was very much in vogue during the 1970s. You know, it was something that countries felt they could do. If you look at how many jobs it would protect, for example, in the US iron and steel sector, it's around 80,000. But the problem is that everything is being done on this sort of shock and awe tactic. If you like, it's everybody is going to hear about all of these changes right now. It's absolutely huge, and everybody has to adjust very, very quickly. And we all know it takes a long time for the supply side to adjust, so it takes a while for everything in America to adjust. They can't just switch over from what they're doing to what they're going to do in the future. So the speed at which that happens and the extent to which the American economy will adjust will determine the longer-term prospect for the United States. But what's really important here is just to re-emphasize the fact that they are pulling themselves out of the global economic system and recalibrating that economic system on the Make America Great Again lines. And that's the important point.
OK, Rebecca Harding, CEO of the Centre for Economic Security. Very valuable analysis on, of course, a crucial day when it comes to the restructuring, arguably, of global trade. Staying on the tariff story, we've had a post from President Trump in a Truth Social post urging 4 Republican senators to, quote, hopefully get on the Republican bandwagon for a change, I'm quoting, and defeat a Democrat-backed effort to end the justification used by Trump to impose certain tariffs on Canada. Trump is calling on Republicans, including Mitch McConnell, Susan Collins, Lisa Murkowski and Rand Paul in the Trump and Truth Social post. So just bringing that to your attention. Now, for more than 3 decades, the pharmaceutical sector has been protected from tariffs by a World Trade Organization agreement designed to improve access to life-saving drugs. But as US President Donald Trump prepares to launch a new wave of levies aimed at reducing America's trade deficits and bringing manufacturing back to home soil, pharmaceuticals are high on the list of targets. Speaking to us last month, the Irish Prime Minister discussed the impact of his country's pharmaceutical industry.
Those American companies in Ireland have benefited enormously from their presence in Ireland. Ireland has added value to those companies, has helped to strengthen those companies, and has given those companies a base to access the European single market, one of the best markets in the world, and the Asian market, and has huge expertise now built up over 30, 40 years in the manufacture of medicines. It will lead to an increase in medicine, the cost of medicines in America, no doubt about that, and indeed in Europe, and that's not to the benefit of patients.
OK, for more, let's bring in Bloomberg's health reporter, Ashley Furlong. Ashley, what are companies doing then to mitigate the potential impact of tariffs on the pharma industry?
Thanks for having me. And I think in the short term, what we're seeing is increasing stockpiling in the US. But obviously, that's only going to really tide companies over for a couple of months. But what they're really hoping to do is to ensure that patients aren't without the medicines that they really need. In the longer term, what we're seeing is companies looking at where exactly they're getting all their active ingredients from, the chemicals that go into their drugs, where they're sourcing the medical devices that might help produce their drugs. And they're really trying to monitor exactly where this is coming from across the world. The difficulty is that if they wanted to move this to the US, where many of them already have quite significant manufacturing capacities, that's going to take years. We could be in another administration already after that time. So there's a lot of uncertainty about whether they should be moving or whether they should be thinking of, sourcing supplies from other places. But when I speak to companies, the overwhelming sense I get really at the moment is they just don't know exactly what will be tariffed, how much it will be tariffed, which country. So it's really hard for them to make those concrete decisions, I suppose, until this evening when we find out the reality of it all.
Yeah, well, maybe we get some more details. And actually, you also have a story on companies within the drug space moving to Spain. When I think of major manufacturers, I'm not typically thinking of Spain. I'm thinking maybe of the UK, France, Ireland, of course, Denmark. What is underpinning this shift to Spain?
Yeah, what we're seeing is sort of a shift away from some of the traditional countries that you typically see pharma, playing in the UK, Germany. And companies are really looking for countries that are providing something extra. So when I spoke to companies about, why they were, having more R&D in Spain, really, it's because Spain's offering something really unique. They're offering much more support, government support. AstraZeneca spoke to me about how the mayor in Barcelona is helping their employees, set up with a new accommodation or, driving license. Those might sound like quite minor things, but for companies who, have countries all over the world sort of, asking them exactly what they want to bring their investments there, those small things can actually tip the balance. And we're seeing a lot of clinical trials being done in Spain. Actually, they're sort of the leader in Europe at the moment and trailing only a couple of other international countries. And that's because the regulator's speedy, the regulator's willing to talk to companies, willing to engage with them. So the companies are really saying that they're getting something unique from Spain. There's obviously a risk that, the threat of tariffs, the threat of something, using the stick rather than the carrot might actually lead to companies not staying in Spain for that long.
Actually, it's interesting you talk about speeding up approvals. I wonder to what extent approvals are going to be delayed by the changes that's happening in the US under Health and Human Services Secretary Robert F. Kennedy. A number of senior names being pushed out of that agency.
It is chaos we're seeing at the FDA in the US. So, as you said, a number of senior names, but more widely, it's just, it's hundreds of employees who are dealing with regulatory applications, who are dealing with, these drug approvals that companies rely on, and, have very stringent timelines on what they're expecting and when they're expecting their drugs to come to market in the US. So if those timelines are delayed, if the expertise isn't there, if the guidance isn't there from FDA officials, that's incredibly detrimental to pharmaceutical companies' bottom line.
Ashley Furlong, excellent update in terms of some of the potential impacts on the pharmaceutical industry and what is happening across the FDA and other parts, of course, of the health structure in the US. Bloomberg's health reporter, thank you. You can track, by the way, every tariff imposed by the Trump administration and get full analysis from our Bloomberg economics team. That is all on Bloomberg.com. You do not get this elsewhere. So go onto the website and see the impact and the tariffs as they come through, of course. 4 p.m. New York time is the announcement in the Rose Garden from the Trump administration. Coming up, we're going to explore the potential market and economic fallout of tariffs and get another perspective and more analysis with Anna Boata from Allianz Trade. That interview is next. This is Bloomberg. OK, if you did not know this already, then you've been living under a rock, because President Trump is set to announce the most expansive US trade restrictions in a century. Upending the post-war global trading system and posing, of course, difficult-to-predict economic risks. Plans to impose what Trump has called reciprocal tariffs have left investors, businesses and consumers guessing what lies ahead. We hope to get more clarity later today, 4 p.m. US time in New York, of course. New York time in Washington is the announcement, of course, at the White House. Anna Boata, head of economic research at Allianz Trade, joins me now. Anna, thanks so much for your time. What are we seeing in terms of trade flow impacts already as a result of the threats and the tariffs that have come through up until now?
Well, look, the U.S. tariff is today at 9%, right? 9% is the highest since the 40s, and we started at 2.5. So, of course, you have an impact already in the fact that companies don't really want to take the hit on their input costs. We see input costs rising already quite fast, but we also see that companies started to prepare already before the end of 2024. The stockpiling has been accelerating in January, and we see that in all the port data that we have, goods that are coming in the US from Asia, from China. So companies are preparing. Why? Because they don't really have the capacity to absorb those rising costs onto their margins. And they also see that the US consumer is not necessarily ready to pay more or higher prices on those goods, right? We do see that consumer confidence has deteriorated quite fast. And we see that the US consumer is very worried about inflation, actually, something that President Trump has said he will resolve during his mandate. And in addition, we also see that the US consumer, something new, started to save again, right? So we have this precautionary behavior that starts to actually embed into the US consumer just because everybody's concerned about the impact of the tariffs, right? We do see already negative impacts, but we don't necessarily see a recession upcoming, right? We are in that kind of situation when uncertainty is very high, but we still see some hopes that we are not going to cross the negative line, right? We have this zero growth as far as we forecast in H1, and then a slight acceleration to bring US growth at 1.5%, which is quite a low level, right, for US standards.
Yeah, Anna, I want to get your views on the growth impact, but just to stay on the specifics around tariffs and the corporate response to that. What are you seeing in terms of the corporate ability, the flexibility to diversify to other markets, and what's happening in terms of capex decisions?
Well, it's interesting to see that, some of the pledges of the President Trump was to bring back some of the investments in the U.S., right, some reshoring. And we have seen over the past weeks a lot of announcements from companies that are starting to announce higher and higher investments into the U.S. Now, of course, we stand at $1 trillion of announcements, which is quite important, 3% of the U.S. GDP. But this is something that will materialize in the medium run, in the next 2 to 3 years. So I should not see any positive impacts in the short run. And then we have the topic of labor shortages, which is very important because at the same time of the tariffs, we also have a lot of policies into immigration and a plunge in the immigration flows into the U.S., right? So this is something that is really worrying to us because this will drive inflation much higher. It's not only the impact of the tariffs going from the 8% level today, 9% maybe tomorrow if the reciprocal tariffs are only on tariffs, or maybe to 18 if we take the VAT and the non-tariff barriers, but it's also about all the wage growth, right, which is also in the labor market, which could get even stickier. So we do look into an inflation that could go to 4%.
Okay, so Anna, just briefly then on that point, is stagflation in the US now becoming a base case?
It's not yet our base case scenario, but it's a scenario to which we give 30% probability, so quite a high probability, right? We do believe that there would be these negotiations, right? There will be several deals bilateral deals between the U.S. and countries. We already see some proactivity from emerging markets, India, Vietnam, Brazil, countries that would be very hardest hit because of the reciprocal tariffs. And we do believe that there will be some agreements, even with Canada, even with Mexico, in the second half of this year. If this doesn't happen, of course, we do talk about a recession in the U.S. and inflation above 4% because the U.S. tariff will be closer to this 18%.
Great analysis, Anna. We've run out of time, I'm afraid, but thank you so much for your input. Anna Boata, Head of Economic Research at Allianz Trades. Now to some other stories making the headlines today. Izzy Englander's Millennium Management and Ken Griffin's Citadel lost money last quarter, even as other hedge funds gained. Millennium's flagship fund slid 2% for the quarter. Citadel's main hedge fund fell 0.85%. Meanwhile, the likes of Renaissance Institutional Equity Fund, that climbed 12.6%. And Greenlight, which invests in undervalued shares, surged more than 8%. President Trump is said to be planning a meeting with top officials today to consider a proposal for divesting TikTok's U.S. operations from its Chinese parent ByteDance. Sources say the administration is considering a deal that would include Oracle and Blackstone in a joint venture. The deadline for ByteDance to find a buyer is Saturday, although Trump has said he would be willing to extend that deadline. There's plenty more coming up as we set you up for Tariff Day. Stay with us. This is Bloomberg. $33 trillion worth of global trade in the spotlight then as we lead up to this Trump tariff decision later today. The details still being wrestled with, of course, but this is the potential impact. This is the baseline in terms of tariffs historically in the US, all the way back to 1911. We are not looking at tariffs. We have not seen tariffs at this extent since about the 1800s. A remarkable potential outcome by the end of today. What does this mean for where to hide then as an investor? Maybe the bond markets are still there. Treasuries have returned about 3%, equities down about 5% in the most recent quarter, unless, of course, inflation becomes more of a risk than recession. Plenty more coming up. Stay with us. This is Bloomberg.